A reminder that trading is risky, and use capital you can afford to lose if you're playing this game. And I've got the half gap at the 11 and a quarter area. We know we're coming into the middle zone right here. Anybody that's had a reasonable trade, if you're looking at a couple of different charts, this is somewhat supportive the first time back. Well, we're also running into the red and the green lines now, and we have to get above those and stay above those. So I'm going to caution longs to think, despite the fact we had such a rip-roaring day yesterday, I'm going to advise some caution and hit and run type trades long side. Don't think that just because we had a rip-roaring day yesterday, we're going to get the same today. That's called a recency bias, by the way. Half gap is hit, 11 to 11 and a quarter. Big pivot, we said 12 and a half. So my suggestion, anybody that's playing for the half gap trade, be paid in here in that 11 to 12 and a half zone. First time here. It's just a common sense idea. May not work. May get another 20 points in the next 2 minutes, but day in and day out, that's a conservative idea. Make sure you're paid coming back into the top of the pipe from overnight, because this was a breakdown overnight. So based on today's range, for now, this was a third time through trade right in here. And usually that's where I'm going to put it, like that. So you want to make sure you're paid coming into that zone. So we've talked about this pattern before. It is like a Z pattern. Overnight, we had to sell, and then we had the convenient trade buy with yesterday's trend. And a suggestion that today I think we're going to get probably a more muted response ahead of the news. So as we get more information from the market, you get the right to start to move your pivots around and start to get some trade ideas. For now, obviously the low is support until broken, and that angel has held for now. So this is just using 2 or 3 different ideas and trying to marry them together and see, does it give us an edge? I think it does. Here's our angel. And this is the angel because this one had its low violated. And then this stepped up and actually a little bit higher than the previous one. So range trading for now, that's all we really know. And despite what happened yesterday, I would still suggest anybody who is long side, make sure you get paid ahead of news today, especially if you're a swing or position trader. Typically, we won't get a big move ahead of the Fed coming backwards. Sometimes we just get a knee-jerk reaction up and then it sells. But for now, I'm going to assume because of the outsized move yesterday, it's going to take away some of today's power for now as we consolidate those gains. And in this proportion, remember where we suggested this was a double. And when everybody else was saying we're going to China, we said, well, I think this is going to hold for now, but we have no idea how high that's going to bounce. And then we got obviously a terrific sell, but we've also had a ricochet back. And as such, we had pointed out the notion of 17 on this scale as being a very important bottom that needs to hold to keep us in this next box. So basis this scale that we've been looking at, much broader scale, and the 32 and a quarter is something we're going to have to pay attention to as a resistance pivot. Anybody's got the 12? Paid for sure. 11 and a quarter to 12 and a half, we said paid for sure. Big pivot. Anyways, this is the election low, and then when a lot of times I use some symbolism in my blog posts, and the echo that I referred to the other day was my expectation that we're going to get another kick off of the election in a positive manner. Part of it has to do with beginning of the month bias and FOMC, but part of it, I just felt, one way or the other was going to continue a little momentum. This was stronger than I expected, truthfully, yesterday, and I think probably a lot of us. But that's how you protect yourself. Instead of trying to fade, you just keep an eye on those moving averages. 30 was terrific, and so was the 15. As long as you're above, this is a 30-minute chart. As long as you are above the blue and the red and the green lines, in the afternoon, this just took off. You could see where it picked up the support from the red line and got above the green and stayed there all afternoon. And then if you want to go back and scale it back, and once you know what the 30 is doing, then you can go and you can look at your 15s and you can see how powerful the 15 and the 30 were yesterday. And here's an example today of the 15 over and under. And so you'd be deceived by this by not understanding the 30-minute chart support right here. So that's an important way to use moving averages. And if you want to come back and look at a 10, you can look at a 10, but as long as the 15 is our base chart, as long as the 30 is backing it up, then you got to believe in it a little bit. And here's our 5. And so we've come back home into the rain line support, trying to hold for now. This is our fast chart. And after a day like yesterday, I want to be able to migrate away from the 5 and not just look at a 5-minute chart. But if we're above the rain line and the green and the blue and the red, then we're still bouncing. 12 and a half pivot. Anybody that got the 12 and a half, congrats. That's a nice trade. Morning after trend day trade. No expectation of taking out the highs or anything. Just an idea that, well, maybe we can get ourselves a bounce, be it somewhere around a 10-point bounce from that 02 support area. Come in and get typically what a lot of traders look for is that type of a range. Will we get it? Nobody knows until hindsight. And that's morning after trend day and does not have to take out the high. So hit and run and grab what you can in what I think will be a little bit tougher trading today ahead of news. All right, take a look at Amazon. Look how this is conforming. Had a breakout here, 3-point breakout, and look how we're getting the bounce in Amazon, and we're obviously in this box, this white box right here. Looks to me like we've got a gap up here, just above this. So if you're trading stocks or ETFs or whatever, this stuff works great for that as well. And obviously, it looks to me like using one of the fangs to help keep the market moving. Risk and reward should start to come in, obviously today based on this. If we break the pipe, then the next resistance line or level is up here, 1775, basically. And it looks like they're using that to help move the market today.